Well, good day, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Monday, the 28th of March, 2022, 7:15 p.m., and I can't wait for March to be gone. Honesty is what makes things work. I put out recommendations, and they have not worked out well this month at all. That happens. If you adjust yourself in futures to the current events, you get hurt. Let me explain something. A $10 move regularly, $5 moves in crude oil daily is not the norm. If you take a look at today, the cotton market, not the norm. By the way, that had about a 7-cent range. If you look at coffee and you think a 10-cent range a day is normal, not the norm. We just opened in the wheat market, so I can't talk about that, but it was down 45, 50 cents today. Just like that. Not the norm. So what I find that over my career I've discovered is when markets aren't in more the norm and they get into these violent moves, if you adjust your technique to try to catch them, great. The biggest thing you can do in a market like this, and I've said it to you for over a month, is don't be a position trader, be a day trader. I'll stick with what I'm saying. And the reason is these moves where you open 50 cents against you in wheats, $2,000. You drop today like that in the crude, so all of a sudden you had a $7,000 drop. Yes, I know you can trade the smaller size contracts and they're phenomenal, but the moves are difficult. And when they're difficult, you got to do what I'm teaching you. Learn to pull back, learn to maybe not trade for a bit, or day trade. Step away from your norm of looking for positions because it's not offering it right now. You can go away now because that's it. By the way, if you want any of the free offerings I have, and there's quite a few of them, just take your cursor at any point during this, put it up here. It'll take you right to our website. You can see everything that's going on there, our free offers, the education, and so on. So in the S&P, as we were down here, very frankly, I said, if the market rallies, I would expect to see resistance at the 18-day average, and I do not expect the market to go up and make a new high. Regular viewers know I've been saying that. I'll stick with saying that. That is what I said, and you're up to that zone where, of course, you got me questioning myself, but I'll stick with what I said. Generally, my first reaction is it. If you're bullish, you have to think you're going to take out these highs. If you think the fundamentals are such to do that, you're right, I'm wrong. It's that simple on a fundamental basis. As a chartist, I'm not interested in telling clients to buy that big of a vertical rally from the 41.25 area up to 45.66, which is 4,000 points. Almost every day had a higher high. There's two of them or so in there that didn't do that. When you look at the swing line, a dramatic move, higher lows, higher highs. When you look at moving averages, I thought, and I was right for an hour, that the 200-day average, that the market would trade between the 200 right here in gray and the 100 in the green. And today the market clears it. So what's the next stop? Well, it may not be the Bollinger Band. Bollinger Bands tend to stop markets when you have patterns like this. When you're coming up, first time you're rallying into them, and here's the combination of a key moving average and that. That typically is the kiss of death on a rally. This market stalled there, but it has just proven it's got more strength than I gave it credit for. It could even go further. Do you think it's going up here? I'm going to repeat. That is what, if you're buying up here, and if you're a trend trader and in a position that you want to hold, that's got to be your next target. You might be very right. I don't know. The strongest signal I know is the slow stochastic reading, and it's embedded. Embedded occurs when the red and the blue lines go sideways over 80 for several days or more. Until the red line closes back under 79, it means that on the breaks, the traders are typically buying. Now, there's a way to do it. I teach it in my course. I'm not going to give you how to do that here, but that's what the traders, I think, are doing. And again, a lot of day trading going on with it. Nasdaq, same thing, but I see a lot more resistance. Why listen to me? I haven't been right anyways. As you've been coming up, I did not think you'd get this high, but this is the next major resistance area. And by the way, I'm not enamored to be a bull or a bear. The fundamentals can get you screwed up as a chartist, so you got to be careful with them because the markets don't move on them all the time in the short term. In the long term, they tend to do that. So I'm going to look here. That's your major resistance area. Embedded reading, bullish as can be, and that's a likely target that the bulls will want to take money off. I think today was the day in the today, right now, in the Dow yes, it was Monday and tonight against the 100-day average to take a lot of their long positions off. The market's embedded. It's given opportunities if you wanted to buy it, and that's the first major objective. If it blows through this, then 35,500 is the next potential target. In the Russell, the one market I said not to be short at all is the Russell, and that's paid dividends for me in the sense that I haven't been wrong on the others, but I'm not right either. Higher lows, higher highs, big resistance up here. Well short, though, of the all-time high. In the VIX, I think the pros are wrong. I think they never thought you'd get back to this number. That's what I would have thought. I'd be looking at it right there going, okay, I think that what they did is they wrote puts. I've mentioned that right there, looking for the 18-day average. I do not think they thought you'd be able to break down into this whole zone and embed no less. So where's the downside target? Well, two things. And the VIX is a great canary in the mine, and I've told you that. This is the one that you look at. You're embedded. That's the most bearish signal. But there is another signal that creates a problem. If on Tuesday or Wednesday today's high is taken out, the odds favor a mover that's going to carry back towards wherever the 18-day average is at that point in time. Let's assume it doesn't do that and it goes down. It's already underneath the 200-day average and the 100. So the next spot's wherever the Bollinger Band is, and when the market reopens, it's going to point down and be very close to the blue line, which I picked up right here, is the major support where the market lifted and never visited that area again. So that's what I'm watching. So that's one of the things I'll be looking at. This market has been telling you the stock market's going to rally. I've been saying that in my updates, and that's pretty much how it's been working. Now in the bonds, it's nice to get this noise of a rally, but you haven't lost the embedded reading, which tells me the market on this rally is looking for pros to sell into it until the red line closes over 21. Same thing in the 10-year note. I think they'll sell it looking for lower lows before this is done. We then get to the dollar index, which is already overbought. Any reading in the slow stochastics when you're not embedded that has a 7 in front of it is overbought. Could it go higher? Sure. But the Bollinger Band with an overbought, it's probably going to be a big number the market's going to have trouble with. That is not a bear number. That is where I think the pros will take some money off the table. And in the euro, what's suddenly happening, instead of dropping like that, notice what the slow stochastics are doing. They're flattening and tightening. You're going to get one of these whipping markets out of that most likely. Downside bias unless you take out 110.71. Potential on a washout if you got there around the 109 level, but more or less stuck at the 18-day average and just playing games there. Remember, if you'd like to look at all the different things that we offer our customers, free market letters and the like, so on, just take your cursor, go to the top here, it'll take you right to the website. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.